for that. Very interesting moves in the commodity space. But one of the stocks that we are focusing on this morning is Bharat Forge, because the North American Class A truck orders have come out and it's not looking good for the month of March. In fact, the total sales are down about 10% on a year-on-year basis, and the sales are down almost 17% on a month-on-month basis. Coming in this time around at just 19,000 units. So there's a big fall that we've seen. Now, the commentary that came in from FTR, which is the company that tracks these orders, last month they did say that, the backlog is quite high and the production slots are mainly filled in Q3. A lot of the production slots. Hence, Q4 tends to look a bit weaker. Also, there's uncertainty in the economy, and although demand has not collapsed, they say, fleets still have access to a lot of capital, but there has been a bit of a slowdown as far as the numbers are concerned. Of course, Bharat Forge, you have a couple of others like GNA Axles that have an exposure to the North American truck market, so there's a bit of a disappointment over there. But Federal Bank is the other stock on our radar. Abhishek is here to give us the latest. Abhishek, over to you.
Well, Sonia, as you mentioned, Federal Bank has come out with a business update, which is one of the best in last 14 to 17 quarters. However, what could weigh on the performance of Q4 is the net interest margin, which could actually dip on a sequential basis. I'll explain how. So first, the deposit momentum, it's pretty strong, 17.4% YOY, one of the best that you are seeing in last 14 quarters, and about 6% sequentially. The loan growth is pretty robust as well, 20.2% YOY growth, one of the best in last 17 quarters, and about 3.8% sequentially. However, the CD ratio, or the credit deposit ratio, that's dipped to 83.2% when compared to 84.9% in the previous quarter, and the CASA, that's also grew minuscule in terms of what the deposit momentum has been. So 3.9% growth on a YOY basis and about 1.1% sequentially. The CASA ratio is at 11-quarter low. So in a rising interest rate scenario, when you're losing out in terms of your low-cost deposits and your loan growth is below your deposit growth, the net interest margin could come under pressure, which is weighing on the stock price today. Back to you.
Okay, thanks.